you need to understand at volume, do I have a profitable venture? And profit simply is the money that's left after your cost to sell a certain item.
Hello, and welcome to another episode of What's Working in E-commerce. I'm your host, Eagan Heath. I'm the owner of the digital marketing agency, Caravan Digital. We do on-site SEO, paid search, paid social, and email automation. So check us out at caravandigital.com. Today, I have on a friend and e-commerce colleague. We have Wayne Richard, and he is the COO. He's a partner and a managing director of the U.S. division of Bean Ninjas, Bean, B-E-A-N, Ninjas, and they're an accounting firm specifically for e-commerce companies. Wayne, thanks so much for coming on.
Yeah, I appreciate the time and the opportunity to chat. It feels a bit different having it recorded. Typically, we're side by side at an event. So this is a great treat for me. Thanks so much for having me on.
Yeah, likewise. Like some other guests, I know you through the dynamite circle of internet entrepreneurs and business owners. So it was fun to talk with you down in Mexico City, I believe it was. And I'm really excited to have you on today. Wayne, when people come to you, they've got an e-commerce company. I assume they're underwater, or they're totally confused by their accounting. What's going on when they come to you? Like, what are some of the problems that direct-to-consumer e-commerce businesses have with their accounting?
I think first is people assume that plugging in a robust accounting system like QuickBooks Online or Xero is going to solve their discomfort around the conversation of their financials. So in most cases, the problem is simply the owner is not confident in their ability to know what their numbers are, and quite simply, how much money is coming in and how much money is being spent each month in their business. I think in particular to e-commerce, it's extremely difficult. There's so many factors involved in e-commerce, and the movement of money often occurs well before you have the opportunity to generate that sale, right? You're shipping wire transfers to your suppliers for product. You're spending with agencies and spending on paid ad traffic before you have that opportunity to generate and receive the proceeds of the sale. So the opportunity for sellers really is getting in a place with the support of an expert to gain that confidence and clarity into their numbers so that they can start making more informed decisions across those many areas of spend that they have to manage within running an e-commerce brand.
Yeah. And Wayne, I can tell you've gotten good at speaking in normal language about this. I know with accounting, you can dive right in, and probably that confuses people. So I noticed one of the things you called out then is sort of the cash flow cycle of money's coming out first, sales come later, we get paid later. And so we have to figure that piece out. And so maybe a normal small business owner might be doing some form of cash accounting or profit first accounting. Certainly in a service business like mine as an agency, that might cut it. But in e-commerce, there's all this complexity around inventory and who gets paid in which order. How do you navigate that, and how do you start to talk with a business owner about this? Maybe they're product or sales or marketing focused. They didn't get into it for this accounting piece of it. How do you talk with them about this?
Yeah, I think one of the major challenges, as you have alluded, is around how to appropriately account for inventory, right? I think a lot of people consider I've sent money out, therefore it's an expense in my business. What's unique about accounting is there's certain rules and regulations around how and when you're able to recognize certain expenditures within your business. So one of the factors that's important for us to have conversations about is the basics of financial literacy as it pertains to accounting and reading and interpreting the story of numbers that comes from your various financial reports. So there's really three financial reports that make the most meaningful, that provide the most meaningful insights to you as a business owner within your business. The first, as everyone knows and is probably most familiar with, is a profit and loss statement or an income statement. It simply shows you the sales against those expenses that have been recognized in your business across a certain time period, whether that be a year, a quarter, or a month. Second to that And sometimes more important to businesses is a balance sheet. So a balance sheet lists out the various assets you have within your business, the cash being held in your bank accounts, the value of inventory that has been purchased that has either is sitting on a boat making its way to an Amazon facility or a 3PL here in the US, or is sitting in your warehouse ready to be sold. So what we do is help our sellers understand through building up trust and having those conversations with them around kind of the basic concepts of financial literacy and the timing in which money that's being spent or the value of inventory that they're holding should be represented on one or either of those financial statements. I'll mention the third briefly, and this is quite critical. I think a lot of accountants and the content you'll see from e-com specialist firms like ours is often a push to move to accrual accounting, and very generally based is the idea that you're able to align your spend on inventory that may have been done months prior to the same month in which the sales are generated. So for kind of a basic framework, if I'm someone that had spent in July on a PO and for inventory that I hope to sell during Black Friday, under that cash basis of accounting, you would recognize that spend in July when you sent the wire. Well, you know you're not going to receive the sales and recognize those proceeds from the sale until November. So what accrual accounting allows for you to do is when that initial wire is sent for inventory is recognize that value on your balance sheet in that inventory as an asset. So it's something of value your business holds, right? Then in November, when you sell those goods on Shopify or Amazon and you have the income, you can then match the income with the expense for the volume of orders across the various SKUs to assign the cost. So then you have a clear alignment of how much profit's being generated on those products. So that's quite unique. But when you're so singularly focused on accrual-based accounting and profit, you lose sight of the fact that profit recognized in November is not entirely all the cash that you're going to have available, right? You also need to be very mindful as an e-commerce operator of the profits being generated. And I'll share a tool, and I hope to get to something a bit later that helps break down how to understand this. But you also need to understand the timing and flow of cash through your business. Often another great tool for sellers to understand alongside their unit economics and their contribution margin is their cash conversion cycle. There's amazing stories that anyone can Google and find about the Gymshark success and having an opportunity to buy on terms and pre-sell, essentially generating a scenario where they're receiving the proceeds of sales before they're required to spend money for the goods that they've actually sold.
Gotcha. So it's really that piece. It's not just are we profitable? It's where's the cash? When is it coming? And how do we account for that? That's a great way to put it. I do want to jump into this calculator you have and talk about some of the free tools you guys have. But first, I just want to ask you, let's say someone doesn't do this. Let's say they've got a basic bookkeeper. This bookkeeper does service businesses and product businesses and e-commerce. It's like they're not specializing in e-commerce. What are some of the things that can go wrong for that business owner? Is it, hey, they're profitable, but they don't have cash? Is it they have no idea how much they can invest in, say, growth through marketing? What are some of the pitfalls? What are some of the specific things that can happen and trip e-commerce owners up if they're not looking at accounting this way you're describing?
Yeah, I think there's one great example we had from a particular customer that was looking toward additional sales channels to open up within their business to create additional scale. And as you're aware, certain sales channels come with platform fees and charges attached to selling within those platforms. So without understanding in particular what their margins are across the cost to procure the product, to fulfill the sale of the product, to list these products on these platforms, to perhaps, if this one in particular was a wholesale channel, to discount their MSRPs to a price that makes it attractive for wholesale partners, they may be in a position where they're actually scaling themselves out of business, right? Higher volume orders across these channels at loss margins create further losses. So I think that's one of the pain points. I think in particular as well, an example, we were working with a game board company that was selling online, and they had identified a method of collecting sales, again, through a new sales channel. And what was being collected were sales in a particular holding account, but because that particular sales channel had never been set up with a bank account for this business to deposit the proceeds of the sales to, this holding account just kept building and building and building. And we were matching the sales from the sales channels to the deposits being placed in their bank account, and identified this gap of about $50,000. And we mentioned to them, wow, it seems like you've begun to receive sales in this sales channel, and we're not seeing the deposits posting to the account. You may want to reevaluate your setup or call your rep. And they did. And they discovered that simply by adding the bank account to which the proceeds are deposited to, they were able to see a nice bump of about $50,000 of sales that have been generated that just simply didn't make it to their bank account.
Wow, what a great story. How interesting. Now, Wayne, I want you to pull up this worksheet and talk us through it. Maybe give us the high level real quick of when would you use this and what would it do? I know you're good at the sort of saying it in normal English first of what is this spreadsheet and, what do you use it for?
Yeah, I think very simply, the way in which you hear brands being founded is someone has done some research or has developed a product that they believe they can list on Amazon or build a Shopify store and sell direct to consumer, right? And I hear these stories all the time. Part of my role is to handle our sales and discovery calls. And it's amongst one of the best parts of my day, right? It's almost like continually listening to how I built this, but with real people that have amazing stories about coming across these unique products. And I think the timing for someone to use this is when they have that idea. I think often people look to get everything in place first. They know that for accounting, they either need QuickBooks Online or they need Xero, or they come across a software that helps them identify a certain way to account for their inventories. But I think before that, you need to understand, at volume, do I have a profitable venture? And profit simply is the money that's left after your cost to sell a certain item. And I think what this spreadsheet does is, over the last 3 years, we've been able to really bucket the different line items of expenses into main categories that are super relevant to e-commerce sellers as they become the levers that you as a brand operator have the opportunity to pull and influence at any given time, or research a bit further for cost savings or efficiencies to create more margin, which should relate to extra cash in your business.
Gotcha. Yeah, so this is the margin calculator, and I like how this is kind of broken out. We've got things that fall under sales, things that are cost of goods sold, things I assume are other fixed costs below that. Cost of sales. Okay, this is great.
You really have variable costs first, right? So these are things that really, based on volumes, they fluctuate over time. We saw through after COVID the large rise in shipping container cost, right? So freight in to your warehouses was something that really skyrocketed. We've now seen those costs start to kind of stabilize back to pre-COVID levels, but it was something that was quite variable in time. Fixed costs we do have underneath our contribution margin. These are more of your operating expenses, your wages and team costs, some of your agency fees, and those general operating expenses that each business manages. But I think what's important for one established brands to do is understand your baseline. So where do I sit in terms of my understanding across these various levers, and where are there unique opportunities for me to dig in and find efficiencies? So it may be that you have an opportunity, and I'm just picking out a number, to reevaluate your packaging. What if I could save 50 cents per unit on my packaging? What impact would that have on my bottom line? And here I have an opportunity. I call it the margin calculator plus, simply because we can run thought experiments. And I'm going to expand my screen. I'm not sure how much you'll be able to see, but you'll be able to see across the right what the impact of those experiments helps do. So as an example, if we're here, and I think more particular perhaps to your audience, if we're to get our marketing efficiency ratio from a 5 to, let's say, a 7, we're able to save roughly $5 per unit on that marketing spend. So that if we're simply selling we keep all our costs similar and we're selling the same forecasted units, we're able to increase our bottom line margin by approximately 6%. Or generate on those 5,000 units an additional margin of $26,000.
Yeah,
so
it looks like 6 percentage points, right?
That's right.
It was 35.7. Now we're up to 41.5, and that's a big difference. It's almost $30,000 difference, right?
Absolutely. And you can see the change, and that's by changing nothing else. Now, you may also run some experiments where you can look at, well, what impact is changing my average order value would that take? Often when pricing increases, you may see some small reduction in the volume of sales, but what does that look like? At what point does it make sense to move forward? What if I adjusted my discounts? I think just in the listing across column C, or this column represented here, you're able to now think about, not only as an established brand, but as a new brand, the various costs that are required or should be considered when selling products online. So this is probably more particular to a Shopify brand or someone selling on a marketplace outside of Amazon, as Amazon handles the majority of these expenses for you. The Shopify sellers have a bit of added complexity, right? But they also have more freedom in defining the cost for things like packaging. They can do it on their own. They can pick, pack, and store their products initially in their garage or in their spare bedroom. So they have some more flexibility here to identify and manage across these various levers.
And it's been a while since I've taken the ACT here, Wayne. So I was looking at this graph trying to understand it. I think I've almost got it. So on the upper right here, we've got, I assume we did a sale. It was a $92 net sale. And then we're kind of visualizing in the red that $28.83 out of that $92 looks like that came out of, that was our cost of goods sold, right?
That's right.
That included product costs, materials and production, international shipping and container freight, maybe some quality control inspection, duties, tariffs, maybe direct labor, packaging. What is direct labor? That's relating to the product, or how does that work?
That's right. You may have had a little bit of labor that was required to manufacture or assemble the product. So you have a little bit of direct labor applied there. For most that, if you're simply buying product, finished goods from a supplier and having them sent to your 3PL and shipped out, it's okay for these to be zero. What we try to do is just incorporate as many costs within these major buckets as we've seen come through so that costs aren't forgotten. I think often when you're surprised by costs that you weren't expecting, that, also plays into pricing, right? You may be in a scenario where you're unsure. What am I even going to price my product at? And what you can do is first load the cost that you're incurring to then identify what's your target for the profitability of that product, and then assign the pricing after you've already built it from the ground up.
That's interesting. So then after, I think we talked through cost of goods, and then it's cost of sales. I see this is kind of still falling under per unit. So we've got fulfillment, pick and pack. We've got the shipping expense. We've got customer service. We've got some platform fees or payment processor fees. Those are all based on a percent of that sale. So we're still, are we still in sort of variable cost world there? Is that the right way to think about that?
That's right. And what we're trying to do also is apply that cost per unit. Of course, you might have a customer service team that you're using, or an outsourced supplier you're using for customer service. But the more we can identify our cost as a percentage of net sales, the more we're able to put those costs on an equal playing field to drive comparisons. Because often it's not a matter of what the percentage is. It's, are you okay spending a similar amount as a baseline on customer service as you are payment processing fees? And if the answer is yes, then there's really no opportunity to look for savings there. But what you may find, since you've leveled the playing field, you've essentially began to compare apples to apples, is say, that doesn't make sense for my business. I prefer not to spend that much. I don't see the value in that particular area of spend against some of those others as large a percentage as I'm spending. So it just forces you to level the playing field, but also create and ask those questions around each of these areas of spend.
Okay, got it. So after that $92 sale, we took out $28.83 of COGS. We took out another $10.23, at least in current state, of cost of sale. I like that. And then, so then we've got our gross profit margin. We see where we're at on that. And we still got $52.94. That's 58%. And then below that, we've got customer acquisition costs. This is where marketing comes in. And it looks like we're kind of keeping track of what is our marketing efficiency ratio, or our blended ROAS. And I can see kind of how much of that sale did it cost us to basically get that customer, right? That customer acquisition cost. So total customer acquisition cost, any variable costs in there. Got it. Okay. So we're still in variable cost land. This could change. We're doing a certain number of sales. Maybe we're spending more on the marketing. I think you said this is the variable piece of marketing. This would be our ad spend. If we have a fixed fee with our agency or something, that's going to be farther below. But in terms of in that purple CAC area, that's just kind of what's our ad spend, what's our marketing spend, right?
That's exactly right, Eagan.
Okay, love it. And so you're saying, can we get that blended ROAS higher? If so, then potentially that's a place to drive a little more net margin. I love that. And then
that's
we're on
right.
to, okay.
Essentially, can we make every dollar of spend on marketing worth more in sales?
Make it more efficient. That makes sense. Then I see, so that's total variable cost. We had $57.46 out of that $90 some dollars, out of $92. And then contribution margin. This one comes up a lot. I've had previous guests talk about it. Is there anything you can say about that? I see it's basically, we're at the end of our variable costs. What's left? Looks like it's 38%, or is that am I understanding that right? Contribution margin is what's left after your variable costs on the sale.
I believe that's a great representation. Essentially, what you're asking yourself is, how much money do I have available to invest in wages and team costs and general operating expenses that are particular to any business?
Yeah, that's excellent. Now we're into operating expenses. These are monthly fixed expenses. You said, if it's in the US W-2 wages, team costs, maybe agency fees. maybe there's an office, maybe anything that's kind of just fixed is going to fall into here. Oh, this is interesting. And then we've got how many break-even units do we have to basically hit our monthly net. We had a client where it's like they had their own warehouse, and there was always just this concern: are we doing enough sales for this to even make sense? And then forecasted units to be sold. So you've got that red line. We know just to break even, we need to sell this many units. And then at the bottom, we've got our net profit margin after everything. These guys are currently at 35.7%, $164,400. If some of those things were improved, like the marketing efficiency ratio in our thought experiment, that could be another, looks like, almost $30,000 of, 26 to some $1,000 there. Just by tweaking. Was that just one of them? Was the marketing efficiency ratio the only one that we projected and changed?
That was the only one we changed. That's right.
Wow. Okay. So it gives you a clear sense of where are the levers, where can we potentially drive some more profit, get some more cash out. Am I thinking about that the right way?
Absolutely. And then too, you can use this, as we mentioned at the beginning. If you're a new brand trying to identify how to price your product, or at what volume of sales does it make sense to have a direct-to-consumer product available online. But beyond that, even what we love to do is work with some of our more established brands when launching new products to consider these unit economics and run them through this calculator. More importantly, as well, is as we have established brands that have thousands of dollars across a number of these areas, if we can break them down in understanding on a unit basis, we can then run those experiments to help point you to those areas within the business that they can push a little more attention, start making those changes to help creating a more profitable venture. There's often times where brands get just stuck because the founder is involved in the procurement of product from their suppliers, from the ideation of new products for them to sell online, the complexities of working across the various agencies and trying to understand the most efficient platforms to run their customer acquisition strategies. I think when you can point them to certain areas and ideas based in numbers, it helps them identify where the biggest cracks are and really center their attention on those primarily.
Yeah, this is helpful. I'll say, as a marketing consultant and agency owner, what we've run into over the years is we're only going so far down on this in terms of what we know, what we're touching, right? Of, okay, what's your, what are kind of your gross expenses? What are those variable costs? Let's throw in your ad spend. Let's throw in ours to see how you're doing. And the clients would kind of come back and say, yeah, but we've got a team, we've got a warehouse, we've got an office. Every sale's got to contribute to that. And I think your margin calculator here does exactly that, Wayne, of every single sale is in some way contributing and paying down those fixed costs and getting us above that break even into profitability. I think that's excellent. I can just imagine there's people watching this or listening to this, Wayne, that they don't know these numbers. I'm assuming when you say, hey, what do we put in here? And they say, we don't know, you go and help people find these numbers. Is that right?
That's right. So what we've done is we've worked through with some of our customers a road mapping session where we begin to dissect from their prior financials and our understanding of the order volumes across their sales channels, what these numbers are. Of course, some you should be familiar with as a brand operator, but others, fulfillment. You may get one large invoice from your 3PL, right? And it's a $10,000 a month invoice. So we'll create opportunities to break that down and understand just initially, like, hey, what's the baseline? I think it's important for anything when you're trying to make measurable changes is to establish where are we starting from, right? So we have the conversation in our initial conversations with sellers, like, what is the current baseline? And we help provide some insights around where to identify and find these numbers, or we create assumptions, right? The power of assumptions is over time, and through reviewing your assumptions against actual performance, you're able to identify those areas you're more and more wrong about, right? And you're able to firm up those assumptions to create more certainty over time. So what's important is first creating that baseline, understanding where we're starting from that baseline, beginning to make informed decisions about what we're hoping to change, and then continually challenging our assumptions over time and progressing closer to that goal we're trying to hit.
Well put. Love it. Wow. Anything else on this margin calculator, Wayne?
I think in particular, we've covered most. I love the idea of understanding your break-even units. I think most folks don't understand the cash required to continue at the run rate they're currently spending. And it's important for people to know, if we were to see a significant reduction in sales, let's just go back. If I put everything back in line and I just took your order volume down by 1,000 units, what does that look like? Well, that looks like, a change of about $34,000. But, and we're in a position sitting on cash to where we can afford that $34,000 loss for 2 or 3 months. You begin to understand, how much longevity your business will have in light of those low points. And also start to understand, hey, if we're to be successful and be in a position, what can we then do to optimize this additional margin? What are those particular areas where we're seeing the biggest opportunities to increase our spending to help create larger profits through our business?
Really drive that bottom line. I love seeing that. Thank you, Wayne. I know you said, I think we'll be able to make this available. We can put a link to this resource. Really appreciate that. I think listeners and viewers will love to check this out and kind of, enjoy playing with it, trying to put in their own numbers. Maybe you can say a bit, Wayne, about, who's a good fit to potentially reach out to you guys at Bean Ninjas.
Yeah, we service exclusively e-commerce brands. We're particularly a great fit for those Shopify brands that are doing over 7 figures. We have brands that are doing as much as 20 million per year in annual sales. We tend to find that those that are starting to explore the NetSuites, the larger ERPs, aren't an amazing fit for the service that we can provide. So if you're an e-com brand doing about 1 to 20 million, which is a pretty broad range, particularly in the health and beauty, wellness, and apparel space, we are a great fit to support your e-commerce accounting, financial management, and bookkeeping needs.
Yeah, that's great. And I'm looking at the website. It's Bean, B-E-A-N, like bean counter, B-E-A-N ninjas, ninjas.com. Really fun site, great design. You guys have awesome content on here as well. Nice YouTube channel. I see you talking about, integrating with WooCommerce and other platforms and services like that. So definitely check them out at beanninjas.com. Anything else to say, Wayne, or anywhere else you want people to find you or you guys?
Yeah, I'll just say we do offer, if you go to beanninjas.com/toolkits, we do provide the spreadsheet that I've shared as well as a cash conversion calculator, in addition to basic setup documents. We believe that founders should be familiar with their numbers and the systems being used to help manage their finances, but often lack either the interest, time, or capabilities to do that themselves, to which we can then provide that value to handle it for them. So I'm at Wayne at beanninjas.com. I'm open for folks to have conversations around their confidence in their business financials and help point them in the right direction on whether or not we're a great fit to service them or not.
Yeah, love it. Well, Wayne Richard, thank you so much for coming on and sharing what's working in e-commerce.
Appreciate the time, Eagan. Thanks for having me.